Uh, Hello guys, welcome to the second video on this series of videos titled Pathway to Becoming an Independent Trader, right? So in this video we will discuss about the core idea of the market profile and how we can use it uh, to analyze the price aspect. Like in the previous video, if you remember, so we boiled down to the thought that price and volume are the most important things in the market, and if you are able to understand them correctly, then you will be at advantage and you will have that edge, right? So the market profile is basically a price analysis tool more than volume, right? So we'll discuss what is the structure that we have for market profile in analyzing the price, right? And seeing what the price is doing in terms of market profile, how we should see it, right? So and also we will see like what information does market profile give us, and also we will see on a given day, like any day you take, like how we should uh, like what we should focus on, really, like what are the points that we'll be focusing on any given day, to understand what the price is doing, right? Right. So here, so the price and volume have a cause and effect relationship, right? So the cause will always be from the volume, right? The volume will be causing the price to move here and there, right? So we can say the volume is something which is a cause, and the effect or consequence of it is price, right? So here we should in the market profile we will see whether that consequence, the outcome of that volume, whatever is seen on the OI analytics tool, did it actually materialize into actual consequence or not, right? So if not, why it's not is something we should think on, and that is the way to approach things, right? So here, like focusing on this, so price and volume are our main focus, and market profile we are only using to understand the structure of the price and the outcome, the price, whatever is the outcome of the volume, whether it is actually had the influence of the volume that we are really seeing back, uh, seeing in the OI analytics tool, right? So here we are talking about cause and effect relationship, and we are also talking about the success and failure of the volume, right? So if the volume is saying it's a short or it's a long, so in market profile we will see the outcome of it, whether it is successful or not, right? So that is what the market profile gives you. It's having with this background, we first move on to the core idea of the market profile. Like, so what is the idea of the market profile, right? So we'll discuss that quickly. So the market profile advocates that the market is a dual auction process. Auction is nothing but trading, and it moves up until the buying is shut off, right? Or moves down until the selling is shut off, right? So the shut off is not meaning like it's zero or something. So it's the buying is not dominating anymore. Similarly, the selling is not dominating anymore. So when the buying is not dominating anymore, the market stops moving up, right? Until then, it moves up, right? Similar way, it moves down until the selling stops dominating, and yeah. And when there is no dominant forces, what happens is, or there are equal forces on the both sides, then the market tries to stay in a range, right? So but not going into that thing now. But auction process is nothing but a dual auction process, and it moves up and moves down. So that is what the auction process does every day, right? So the buying will take it up and the selling will take it down. So this is a very basic thing. Next, we have parameters. Like the parameters in market profile terms are the price range, right? So when you see a market profile graphic, so you will have a price range to see, and you will have an unfair high and unfair low. So these unfair high and unfair low, you may not be able to see these always on daily profiles, right? But unfair and high and unfair low means that there has been a lot of competition for those prices, and these prices are short lived, right? These prices are rejected, right? So those that is meant by unfair high and unfair low. That is why they are called unfair high and unfair low, because they have been rejected, right? So nobody wants to accept those prices, right? So that is the meaning of this. When we see the chart, we'll try to see what is unfair and unfair low, but you take this concept like it is not, it is something which is rejected. A price which is rejected on the upside is unfair high, and a price which is rejected on the lower levels is an unfair low, right? So next point that we have in the market profile is value area, right? So just how the unfair high and unfair low are rejected areas, value area is something which is accepted area, right? So the difference between that this is unfair high and unfair low are like single price points, but value area is a specific price zone, right? It's not a single price, but it's a zone of a price where a lot of acceptance has been there, right? So that is what is the value area. And on any given day or at any given point, always the market participants are negotiating. The buyers and sellers are negotiating to find this value, right? Even though they don't do it like consciously. Like, see, if for example, if you're taking a trade, see, if you're supposedly buying a particular instrument, see, you feel it is undervalued and it will go up, that's why you're buying, right? So that means that you're expecting the value of that instrument to go up, or you think that value is not here, so that's why you are buying there, right? So the buyers and sellers keep on doing this auction uh, from their perception of value, right? And what the value outcome which comes at the end of the day is something where most of the people agree to it or accepted it, right? That's where the value, that's how the value is created, and it is mostly accepted price zone of a particular day, right? So next concept the market profile has is imbalance and balance, right? So the market profile, there's a way the market functions, like, so so there will be, the market moves in trend and consolidates for some time and then again starts a trend, right? So this particular flow of the market is in market profile terms is called imbalance and balance phases, right? So whenever a new trend starts, right, so whenever a new trend, uptrend or downtrend, whatever it is, if it starts, it usually starts with an imbalance, right? So whenever the market is in imbalance, we don't try to fight it, right? And so the market moves in this particular fashion. So first it starts a trend with imbalance, right? And as long as the buying is dominating, the imbalances are going to continue, right? The imbalances are going to continue, and when the buying is drawing up, right, the there is a balance that comes in, right? The balance that comes in, and after the balance is done, again the market starts moving to into an imbalance, either in the same direction of the previous imbalance or into an opposite direction based on the demand and supply forces, right? So this phase you can see imbalance, balance, and imbalance. This is a cycle of the market, right? The auction process happens in this fashion: imbalance, balance, and imbalance. So the third imbalance that I am mentioning, it could be in the same direction or it could be in another direction. So just a balance in between an imbalance doesn't mean that the imbalance is going to take an opposite direction. It can even extend the previous imbalance after balancing for some time, right? So that is the phase of the that is the flow of the market that is there. But that is what the idea of the market profile of imbalance and balance, right? And this is very similar to trend, range bound, and again trend, right? So it's similar to that. You take imbalance and balance as the words that the market profile gives you, right? And then the last one that is law of demand and supply. This is not really a market profile advocated thing, but whatever the analysis that we do, so we are seeing it with volume to see the aggressiveness, or to see the aggressiveness basically, right? So here I am saying the buying is dominating. So how do I know that the buying is dominating? So only if I get to know the demand that is driving that buying, then I'll know that whether they're aggressive or not, right? So when there is aggressive demand, prices move up, so usually when there is an aggressive demand, buying imbalances happen, right? So imbalance is nothing but a trend, right? So buying imbalances happen on an aggressive demand. So similarly, when there's aggressive supply, the selling imbalances happen, right? And when there is no aggression, the market tries to stay in a range, right? So that's what is law of demand and supply, right? So these are the main concepts, but here one thing that you have to focus upon is the market profile. The key takeaway from this particular slide is that the fact that the market moves in imbalance, balance and imbalance flow, right? That is very important to take away from this one, right? And the accepted prices are called value areas, right? And the rejected ones will have different names, but unfair high and unfair low are the key prices one will have as a rejected price, right? So now, so as we go into the series of videos, we'll slowly try to um, try to address or try to understand more about what are the different parameters that are thrown by the market profile graphic, and what is an imbalance and balance, and how the market moves through those, right? So now moving on, we'll see a series of we'll see a chart of a market profile graphic for a couple of days, right? And then tries to identify what we discussed till now, right? So so this is a chart that you see, right? This is a chart that you see of so each particular graphic represents one day of activity, right? So here, so first we spoke about the auction process, right? So the auction process, we can't like really point to it. It's all of the activity that is referred to as auction process, right? And so for example here, you could say the selling is shut over here, right? And the buying is shut over here. That's why we have this parameter, and then um, we have this price range, right? This is how we refer to that parameters, right? The price range, unfair high and unfair low, right? Here one thing is, the unfair high and unfair low has to be these letters who are single printed, not, and they are alone, right? They are not appearing with any other letters beside them. Then only those are called unfair high and unfair low, right? Otherwise, they are called poor highs and poor lows, and they're always capable of being revisited, right? So I'm thinking I'm going a little bit ahead. So these are the poor highs that is called. So I'm just trying to convey the meaning of unfair high. So unfair high is nothing but which has a single print, right? That is what is unfair high and unfair low. If it is appearing with anything else, then it is not an unfair high or unfair low. But these unfair high and unfair low are not really important, because those are formed after the movement. So you do not have any relevance of them in analyzing or anticipating anything. But to understand this parameter, this is something the market trades within a range of unfair high and unfair low, and the buyers and sellers negotiate, and if they accept, then that forms as a value area. Otherwise, the market moves in search of a new value, right? And that is an imbalance. When the market is moving into imbalance, that means that it is searching for a new value area to accept somewhere else. It could be very near or it could be far, but it has uh, like it has started its journey in search of a new value, right? If it's already found its value, then it stays there actually. So it stays there, and it creates value over there, right? And so when it is creating that value, we'll normally be in balance. But when we are in search of a new value, then we'll be in imbalance, right? This is the flow of the market, right? So we'll discuss that flow here, right? So we'll discuss that flow, whatever we discussed till now, right? So if you see, this is the first day that we have, and the single prints that you see are normally imbalances, right? So we'll come to this topic more in the next video, detailing about the imbalance and balance phases of the market and how to identify them and stuff. But here I'm just taking the single prints, whatever you see, this is a selling imbalance because selling dominated here, right? And again, on the next day, so you don't see that happening, right? And you see a small buying imbalance that is happening, and on the next day you see more of a balance that is happening because the hardly any single price, right? And you see on the next day, right, that there's no imbalance that happened, but on the next day we got a follow up to the selling imbalance, right? This selling imbalance happened and we moved down, right? And on the next day, and we had an again, this is not a single print, it's not an imbalance, but we did have a like a poor lows here, right? And then we had some buying here, and then we had a positive imbalance here. So I'm referring to these single letters as imbalance, if you see, or prices where the prices which are traded for a very short period are being referred to as imbalances, if you see, right? So the market, what it does is, so it moves from imbalance to balance to balance to imbalance. But here, whatever you see in this particular chart is part of, is actually a part of a larger balance that you're seeing. So that's why you see contradicting imbalances, right? So here there is a negative imbalance, right? And then here again a positive imbalance. Then here we had a negative. Here we had negative. Here we had negative, and here we had again positive. So here the market is actually stuck in range, and so when it is trying to go to the lows, we are having a positive imbalance, and when we are going to try to go to highs, it's having a negative imbalance here, right? So that is the thing. So here, so for example, after this imbalance, we have balanced here, right? And then we again moved here, right? So this particular chart is not very clear, but we will discuss more about imbalance and balance in the upcoming video. But the flow of the market is like that. And also I want to focus on one thing here, the value building, right? So the value building is also very important. And the rule is that if the value is being shifted higher from the previous day or the previous week or the month, it usually indicates that there is an acceptance of higher prices, and the trend is going to be and the trend is actually positive, right? In the similar way, if the value is going down or the building up is going down, that means that the trend is down, right? Similarly, if the value area is overlapping, that means that there's a balance in the market, right? So here in this chart, the pink portion that you see is the value area. So it's nothing but an acceptance. If you see, for the most of the time, it accepted within these prices, and that's why this is the value area, right? And the value areas are very important because the opening of the price in relation to value area will give like a good understanding of what the market is gonna do, right? And the opening and the action after that, the opening auction types also are important, that we'll cover in the upcoming videos, right? So the value area is also very important when so we have to see the last traded price in relation to the immediate values available, right? So that is one thing which is also important, right? So value area we have covered. These are the pink areas, the value areas. The main importance of value area is that we see the last traded price in relation to the value, and form a view like how is the price trading with respect to the value, right? The value is most accepted, and price could be in some rejection area or something. Like we will see how the price is trading with respect to value, right? Then imbalance and balance, we'll discuss them in detail, but as a basic idea of imbalance is nothing but a trend, and balance is nothing but a range bound market. So demand and supply, we will also see them, right? We'll see them in the next video, right? So this is the value development is one thing you should focus on, and the last traded price in relation to immediate values, right? So that is the basic core idea of market profile, is that you see the value, you see how the value is building, and you see whether the market is in imbalance or balance. That's the only main focus of the market profile, right? And then you see parameters. That's the other thing. But these two are very important because it tells you the phase of the market that is right now, right? Next is that, so it could be a little bit confusing, but focus that you should just focus on the value, how the value is developing, not on a particular day. Like, see, you focus on the previous values, not on the same day's value. You focus on the previous day's value to see how the price is trading with respect to the previous value. That gives a lot of insights for you, that okay, if the price is trading higher with respect to previous value, that itself is a positive sentiment. And in contrast, vice versa, if price is trading lower in compared to the previous values, right? That's a negative sentiment, right? That's why I want you to focus on the value area part, right? And also imbalance and balance are the focus points, because imbalance helps you identify the trend, and balance helps you know that the market is in balance and it might not move like much, right? Then all this auction process, whatever happens, the buyers and sellers, like we classify them. The market profile classifies them into day time frame traders, like who are the very short term traders, and the other party is longer or other time frame traders, right? So mostly day time frame traders happen to be responsive players, right? They react to prices rather than initiate the market activity, right? So the longer time like traders will have like a longer view of the market, longer term view of the market, and they try to, or they actually create the market activity, and their actions will have like a good impact on the market in terms of its movement, right? So that's why I call day time frame traders to be responsive players, and longer time frame players to be initiative players, right? So here we are saying about the two by differentiating between the behavior, right? So these people are not waiting for any prices, they are just creating those activity in the market, right? At the price that they think from their perception of the value, right? And day time frame traders are just seeing things how they're shaping out, and then they're reacting to it. Those are mostly responsive players that we have, right? So our focus, like as a retail trader, our focus will always be on the long term trader, what the long term trader is doing on a particular day, right? Because the longer term trader can cause a significant movement in the market, and the market can move into imbalance, because what is his perception of value will decide the market's movement, right? So that's why if you see, our focus is always on what the longer term trader is doing, because in pursuing his interest, he is responsible for the way the day's range develops and for the length of the time a longer term trend lasts. So you're always focused on the longer or other time frame traders, right? And these are usually big funds who have like a lot of money, and like mutual funds or whatever you call. So these are those players who have a lot of money power, and those are initiative players, and that's why we focus on them, right? And we don't take daytime frame traders to be seriously, and we only focus this activity of longer time frame and other time frame traders. And how to spot this activity on this particular chart, that we'll be discussing in the imbalance and balance video, right? So the next thing is, after the market players, like the types of market players. So we have something called. So what should be our focus? Like so we are our focus is to analyze the price aspect and the volume aspect on a particular day, and anticipate the price movement, right? So here, so what we will be focusing on any given day is, the first thing that we want to know is whether the market is in imbalance or balance. So why do we want to know this is, so if the market is in imbalance, we want to follow the trend, the imbalance direction, right? Because there is an already an imbalance, we will have to follow that imbalance, whether it is a buying or selling. So we try to, or we go with the flow of the market, right? But whether when it is a balance, we try to take both sides of the market, and try to sell higher prices and buy lower prices. So the first thing of identifying if the market is in imbalance or balance becomes a key aspect on any given day, right? So each this particular thing, we will have a separate video for this, like how to identify if the market is in imbalance or balance, right? Next, so evaluating the power of demand or supply which created the imbalance. Okay, we identified that there is some imbalance, so we also have to see how much of the power, like the demand or the supply, is the reason behind this imbalance, right? So that's a volume aspect that we are analyzing, right? So next thing is that we identify the day's parameters, right? So we identify the unfair high, unfair low, and price range, price aspect, and development of value. So this thing we are seeing the price in relation to the overall context, right? That's what we are trying to see here, right? So then, so when we identify the range, right, and the next focus is that we identify the demand and supply forces within the parameters, like within the range that you have identified using the market profile graphic, like, so until that point, at whatever point you're analyzing, you will have a price range, right? Within that price range, you analyze the demand and supply forces, and you assess if the parameters can be extended further, right? Either the unfair high or the unfair low, if they can be extended, or you have to see if the demand and supply is not so dominant to extend those parameters. So then you would expect a equilibrium or balance to happen, right? So here if you see, we are mostly focusing on imbalance and balance, and demand and supply, right? So imbalance is something which gives you a trend to play with. Balance is something which tells you that there is no trend and you have to be neutral on the market, and you have to be selling higher prices and buying lower prices, right? So that is what on any given day our main focus is, to identify the trend if there is a trend, and if there is no trend, or if there is no trend, as in like we have to identify if there is a trend or not. If there is a trend, you follow it. If there is no trend, you just play both sides. That is what is the like summarized point that I wanted to convey. But to decide if there is a trend or not, so there is a lot of work that we have to do, which is mostly in terms of price and volume aspect. The price aspect is, we'll discuss that in the imbalance and balance video, and the demand and supply is from the open interest data, right? So here, yeah, so that's the main focus of a particular day: imbalance and balance identifying, and the demand and supply that is causing that imbalance or balance. That is the second focus. So these two are the main focus. And so if you are analyzing these two, then you are analyzing demand and supply, and you'll anticipate whether the demand and supply, whatever is coming, will be able to like extend the parameters further, whatever the price range is there until then, whether it can extend further in the day, right? That's the main focus on any given day, right? So with this, I'll wrap up this particular video, where we had an idea of the to summarize what we have discussed in this video, right? So we have identified that the core idea of the market profile is that the market moves in imbalance, balance, and imbalance phases, and creates values every day, right? And and at any given point of time, it has parameters, which is price range, uh, unfair high and unfair low, right? And and the auction process, like, is such that the buying is shut up. If the buying is shut off, then the market stops moving up, and similarly if the selling is shut off, the market stops moving down, right? So these are the main points that we discussed, and also we discussed the types of the market players, right? Which is day time frame trader, longer time trader, and our main focus is to focus on the longer term trader, right? So we'll not really discuss more about longer term trader, because we are merely focusing for these points on any given day, because this includes the effect of uh, longer term trader. And whenever the longer term trader, it is longer term trader's presence is there, we will see an imbalance in the market, right? That's why we are not specifically referring to the imbalance as a long term trader, but we will be seeing the demand and supply that are driving this imbalance, and we consider this imbalance to be caused by long term trader, right? So that's the thing. So this video, so you just focus on this particular aspect, and the previous slides you just take it for your understanding purpose, right? What is the core idea behind the market profile, right? So it is just analyzing the price in terms of value, right? So it says that the price has to be accepted by majority to stay there, right? Otherwise it starts moving up and down by changing the parameters in search of its new value, right? So whenever there's acceptance is there, there is a balance, and when there is no such acceptance, there is an imbalance. This is the core idea of the market profile, right? And that imbalance and balance phases of the market are purely driven by demand and supply, right? And demand and supply are the main driving forces behind changing the parameters, because surpass demand can cause the price to surpass the unfair high, or break the unfair low stuff, right? So that's the thing. So you focus on this particular thing. So on any given day, we identify if the market is in imbalance or balance, and evaluate the power of demand and supply which created the imbalance, if there is an imbalance, right? And so if there is no imbalance, the market is still balancing. Also you analyze the demand and supply, and see for the possibility of for it to extend the range that is there, right? So yeah, so that's the takeaways from this video. And the next video that we are going to have is on the just the volumes part of it, like what are the volumes that we are going to see. the volume aspect of it, the open interest data. It will be very short one, but so that is also that we are going to combine with this price analysis to come up with uh, to see how the driving force of demand and supply can actually influence the price, right? So that's it. With that, I'll wrap this up, wrap this video up.